Tax season is once again upon us, and with the codes constantly changing, even those tax experts have their work cut out for them when it comes to filing all of that paperwork. So here to clear up some common tax misconceptions is certified public accountant Alan Sandersen. Good morning, Alan.
Morning. Thank you for having me.
Always great to have you
Thank
here.
you.
All right. If you're filing an extension,
Yes, ma'am.
you still got to pay up, right?
Absolutely. Just because you're filing an extension to file doesn't mean you have an extension to pay. And if that was the case, everybody that owed money would wait till October, right?
Right.
Well, you have to have 90% of your tax liability paid in by the 15th, or this year the 17th because it's a weekend, or they get to pay interest and penalties. So that's the important thing, is you don't get a buy on paying. The purpose of the tax code is to make money for the Treasury. They want your money now.
And that's big time interest that you could end up paying on this, right?
Sure, and also penalties too. If you don't have the 100% of the, well, actually 90% of the money in at the appropriate time, you get to have penalties, and those are non-deductible.
A lot of people are struggling with the economy right now. What would your advice be to somebody who's overwhelmed by their taxes and says, I just don't have the money to pay this, what do I do?
Well, if you don't have the money to pay, you don't have the money to pay. The IRS does have some special programs this year that gives a little bit of a break for folks that are struggling. They realize that it's a tough time and it's a tough economy. You may have had a job at the first of the year and don't have it now, and all of a sudden you have the liability from the first of the year and no money to pay. So there are programs with workouts, and Congress has told them to be cognizant of that.
Yeah, and better to pay a little bit than nothing at all.
Right, but don't stick your head in the sand. Extend the return or file the return and work out a payment plan. If you're a non-filer, you get hammered, so don't do that.
All right, let's talk about people who have a lot of money. Offshore funds, that all counts, right?
That's a big deal this year, a real big deal. The IRS is going very heavily over people who are trying to hide money overseas in foreign accounts. You've seen the things on the news about UBS and the various Swiss banks and all that.
Sure.
They want to make sure that your worldwide income is taxed. If you're an American citizen, your worldwide income is taxed unless excluded by law. The code says all income, all, from whatever source derived. All is pretty inclusive. So if you're hiding it overseas, you need to make sure that you report it. And if you fail to report those foreign bank accounts, you're going to get hammered with big penalties because they're going to be looking for you.
Let's talk about losses. What if you took a big hit in the stock market? You still have to report those trades?
Absolutely. You always report the trade. Well, there's two scenarios on that. One, let's say you had the big loss in the market. I lost 12 grand. Wow, I'm not going to pay any taxes this year. I lost $12,000, right?
Yeah.
No. Unfortunately, the code allows you to take $3,000 net losses per year. You get to carry the rest over, but an extra $9,000 you thought you could take this year won't happen. If you lost $300,000 at $3,000 a year, you could live to be as old as Methuselah and not get it all. So it's $3,000 a year, period, on out there. Now, let's say you had a bunch of transactions. Golly, I had $50,000 worth of stock transactions, and it was a total wash this year. I didn't make a dime. I didn't lose a dime. Well, if you fail to report it, all the IRS knows is $50,000. You'll get this gigantic bill for $50,000 of revenue, and
Not so much fun.
No.
What about if you have dividends and you don't get them? Let's say you reinvest them. You still have to report that as income?
Dividend reinvestment plans called DRIPs. Yes, you always show the revenue. The good news is that dividend adds to the basis of the stock. And so let's say you bought it for $1,000 and over time you had another $1,000 in dividends. When you sell it, it's $2,000. So you don't get taxed on the dividends that you accumulated over time. But if you don't report them, you get the letter.
All right,
Right?
Alan, we're going to have to leave it there for today. Thank you so much.
You bet.
Some great tips there. We're going to post all of Alan's tips on our website, abc13.com. You can also go there to see this segment once again, just in case you missed it, or you want to hear all of those great tips from Alan all over again.